to come in for the press briefing for Inox Green. It's been about 7 years since we had a press briefing for the last company in the group which IPO'd, which was Inox Wind. So it's a proud moment. It's akin to deja vu to be standing here again with all of you and taking you through the presentation for Inox Green. So without much ado, I'll take you through who we are, what we do, and what our strengths are and what our growth plans are. As Satyan briefly touched upon, Inox Green is a part of the multi-billion-dollar Inox GFL Group, which is one of India's largest business houses, primarily operating in two verticals, chemicals and renewable energy. Under chemicals, we've got a listed company called Gujarat Fluorochemicals, which is one of the largest fluoropolymer producers in the world, as well as one of the largest refrigerant gas producers and specialty chemical producers in the country. We are going forward, diversifying and growing significantly under the new age fluoropolymer business, where we are setting up capacities to service the entire EV arena, as well as the battery and the solar film segment. Under the renewable energy segment, we are primarily comprising of two entities: Inox Wind, which is a listed entity, one of the largest wind turbine producers in the country, with a market cap of about $550 billion. This in turn owns Inox Green, which is the entity which we're looking to take public in the near future. Of course, the dates are in the public domain now. Inox Green is basically one of the largest O&M service providers in the country. I'll talk more about that as we move forward. But just a little bit about the wind sector and the renewable energy sector in India. So while renewables has been the buzzword globally for the past couple of years, from an Indian context, what's also already in the public domain is we've got a very large growth plan outlined where we're aiming for 500 gigawatts of renewable energy by 2030. We're presently at about 150 odd gigawatts. So we're looking at tremendous growth in the next 8 odd years, irrespective of whether we achieve 75% or 90% of the target. The sheer numbers are massive. Probably one of the largest renewable energy programs in the world, within which wind is expected to play a role of about 175 gigawatts. We're presently at about 42 gigawatts, so that just throws open a very, very large chunk of growth to come in for the wind OEM market and consequently the services market as we move forward. The past 4 years in India, the wind sector was undergoing a very, very painful transition from a feed-in preferential tariff regime to an auctions regime. I think we're happy to say that painful transition is totally behind us. We are very bullish about the growth opportunities for the wind sector. We're seeing massive momentum on the green side, and I think that will be reflected in the wind capacity addition, which we'll see on a year-on-year basis in the country. What's also happened is historically there used to be a lot of debate between renewables versus non-renewables. I think it's a foregone conclusion for the past few years. Renewables is here to stay. Renewables is the cheapest source of power, not just in India, but also globally. And given the larger Russia-Ukraine conflict, globally, I think all countries are transitioning to virtually 100% renewable energy as rapidly as they can. I already mentioned to you the larger goals which India set out, within which we're seeing a lot of hybrid tenders now coming up in India and round-the-clock tenders coming up in India. Given that we have a very, very significant goal, it can't just be populated by just wind or solar. So we're seeing a lot of hybrid tenders, round-the-clock tenders coming in. As I mentioned, there's very, very strong regulatory push and government push. Of course, there is no subsidy element to the renewable energy pie now, given that renewables is the cheapest source of power. But we're seeing massive government push in terms of targets, in terms of PSU tenders, in terms of goals, in terms of amendments to the Electricity Act, as well as what is expected to come in the near future, the renewable generator application. At the wind level, what we've also done is recently, I'm sure many of you would be aware, we've launched one of India's largest wind turbines, which was a 3.3 megawatt turbine. It was launched about a month ago by the Honorable Chief Minister of Gujarat. It should be a game-changing move for the sector because we believe that should reduce the cost of energy of wind by an incremental 20 to 30%, beyond the fact that renewables in any case is the cheapest source of power today. The largest wind power O&M service providers in the country. 6 key investment thesis points. One, it's backed by a very dependable sponsor, the multi-billion-dollar Inox GFL Group, as well as by Inox Wind, which is one of the largest wind turbine producers in the country. Secondly, as I mentioned, we're seeing very, very strong government push, very favorable government push, and we've got a very, very large renewable energy program outlined for the country. So we believe that will lead to significant organic growth for Inox Green. I'll talk about inorganic growth as we move forward. Thirdly, we've got a strong execution track record across 9 years. We've been managing, that's from inception. That's where we've been managing about 3 gigawatts of fleet across the country, across some of the largest IPPs, some of the largest PSUs, as well as retail and corporate customers. And we are present across all the 8 key windy states. So we are present wherever wind exists in India. Fourthly, this is a very, very reliable and stable cash flow business. It's akin to an annuity business, except that we've been growing at a CAGR of almost 40% since inception until now. We typically have long-term O&M contracts ranging from typically 7 to 20 years with built-in escalation clauses. Fifthly, we're a comprehensive O&M solutions provider. What I mean by that, we don't just take care of the turbine, we take care of the entire common infrastructure, which is the line and the substation, which is how business is done in India, unlike many of the foreign countries where you only take care of the turbine, which adds a strong cushion to strong Indian entities or people with a strong presence in India. Sixthly, it's a technology-driven company. What I mean by that, we're using a lot of artificial intelligence going forward for predictive maintenance rather than reactive maintenance. And we'll be using this to further improve margins and reduce the cost of servicing turbines. Briefly, I touched upon this. Since inception over a period of 9 years, we've grown from 0 to almost 3 gigawatts. We've grown at a CAGR of almost 40% per annum. And mind you, this includes the 4 years of shutdown in the sector when our growth rates were virtually close to 0. Had it not been for that, clearly our growth rates would have been way ahead. Having said that, given the massive thrust on the renewable energy side, we expect to grow fairly significantly as we move forward. Again, just to sum up the key investment highlights, very, very strong growth expected in the sector, very, very favorable government policies and a large outlay of renewable energy target. Secondly, we're backed by one of the largest corporate houses in the country, the Inox GFL Group, as well as backed by Inox Wind, one of the top wind turbine producers in the country. We also have a very, very strong and diverse cash flow portfolio across very, very significantly rated, credit-rated counterparties, which are some of the largest IPPs and public sector enterprises. Fourthly, at Inox Green, we've got a very strong supply chain. Of course, it came down from the initial supply chain which was created at the parent Inox Wind. Given our presence now across the country on a 3 gigawatt platform, we've developed a very, very strong relationship across spare part providers, as well as leverage the presence of Wind and the group to further strengthen our margins and costs on the supply chain side of it. We've also got a very strong team. We've got about 400 people on a pan-India basis, managing this 3 gigawatt fleet across 8 states. Our top managers have more than 15 years of experience. And lastly, we have a pan-India presence. We are present wherever wind exists, so we are present in all the 8 key windy states in India. Just to touch briefly, I think we spoke of very, very strong growth in the sector. From our document perspective, the RHP perspective, we had to get an industry report which is commissioned by CRISIL. So while you've got various estimates and so on and so forth, I think I'll just throw up brief numbers which came out in the CRISIL report. We expect wind, conservatively, they expect wind capacity addition to be about 20 gigawatts over the next 4 years, which is almost 5 gigawatts per annum. They expect the services part of the market for providing O&M services for wind energy to grow significantly to almost 19,000 crores by 2027. This was at about 9,000 crores in 2016, which grew to about 13,000 crores in 2022 and is expected to move to 19,000 crores by 2027. This growth is expected to be on account of plain vanilla wind tenders as well as hybrid and round-the-clock tenders, which should become the norm for the renewable energy industry as we move forward. So we have a synergistic relationship with Inox Wind with respect to our organic growth. What that basically means for all the turbines which Inox Wind sells going forward, our O&M agreements will come into Inox Green. So as of 31st March 2022, we had an order book of almost 1300 megawatts, and we believe this would entail O&M contracts flowing into Inox Green as we move forward. That's on the organic side of things. I briefly touched upon this in our investment thesis. We have a very, very reliable, akin to an annuity business model, cash flow supported by very, very long-term O&M contracts. We've got diversified O&M contracts across almost 70% of our contracts are with some of the largest IPPs in the country. About 20% of our contracts are with the largest PSUs in the country, and about 10% are with various retail and corporate customers. Long-term contracts, typically 7 to 20 years, with built-in escalation clauses of almost 5% escalating year on year. I did mention as of 30th June 2022, we had a roughly 3 gigawatt fleet, and this has been built from inception over the past 9 years, where it's grown at a CAGR of almost 40% per annum. We have a strong supply chain. We've got established relationships across all the key spare part providers and the key component providers at the Inox Green level. We also have a framework agreement with our parent company, Inox Wind, for any proprietary spare parts which we may require, such as blades, to be procured from Inox Wind at fixed prices. So it secures the entire O&M business for Inox Green. We have a strong management team of 400 odd people on a pan-India basis. And what we've also done, we've got a warranty policy to cover us for any potential risk. So we have an industrial all-risk policy where we cover the entire fleet of 3 odd gigawatts. Basically, barring force majeure and fire, which is in the scope of customers, any potential damage or any man-made error is taken care of by industrial risk policy. Our premiums are virtually at the rock bottom prices of the IRDA guidelines, and that's after a 10-year track record in this sector. So it just shows, it reflects on our O&M servicing capability. So we have a presence across all the 8 key windy states. We are probably the largest player in Gujarat today. We are amongst the top 2 or 3 players in Rajasthan and Madhya Pradesh. And we have a presence across Maharashtra, Andhra Pradesh, Karnataka and Tamil Nadu. I think we're probably the only players in Kerala. Within which I think Gujarat, Rajasthan, Madhya Pradesh and Tamil Nadu are the 4 key states where we expect a majority of incremental wind energy to come up in the next 3 to 4 years. In terms of strategy, going forward, we're really transitioning to an asset-light model with virtually zero or minimal capex. So historically, we developed a lot of the common infrastructure facilities, which are the substations and the transmission lines, because that's how the business model was, where we had to sell turnkey projects and we incurred upfront capex, which was then recovered from customers as we move forward. What we're doing going forward is, while we already have almost a gigawatt of common infrastructure facilities available, we don't intend to build any new common infrastructure facilities under Inox Green. That's a plain vanilla O&M annuity business, which would lead to higher margins and higher EBITDA. As Sachin already explained to you the deal structure, the primary proceeds of the IPO go towards paying off the debt, which would broadly make Inox Green a net debt-free entity. So effectively going forward, we would be at a scenario where we'll be at PBDT, depreciation is optical, there is zero capex. So effectively, virtually all our profitability is, all our PBDT or EBITDA is going to be equivalent to cash profit for the next couple of years. So how do we intend to grow this business? 2 strategies. One is the organic piece, which is pretty straightforward. While we already have a 3 gigawatt platform at Inox Green, and the O&M contracts are at Inox Green with a built-in escalation clause, whatever capacities are set up at the Inox Wind level in terms of the 1300 plus megawatt order book which we have, all those O&M contracts will flow into Inox Green as we move forward. So that will give us clear visibility in terms of organic growth. All this piece. So basically what we want to do post the IPO is transition this sector from an unorganized O&M play to an organized O&M play. So while you have those OEMs who have survived controlling their O&M in any case, this 12 gigawatt is a very, very large chunk which requires efficient and strong players to service their turbines. And we believe we are ideally positioned and have a very, very significant first mover advantage post the IPO to move in and take over a big chunk of this fleet. I think that covers most of the business. If I could, I'll just take you broadly through our revenue. As you may know, these are carved out financials, given that we've taken out the EPC business from this entity and put it under a different company called Resco Global. So basically, this is now a plain vanilla O&M business. The top line in FY22 was about 170 odd crores. You may notice it's been static, more or less static for the past 3 years. That's primarily because the entire sector was in a shutdown phase, and obviously the past 2 years with COVID was very, very difficult to grow this business at that point in time. Today, as I mentioned, we're seeing a very, very strong growth coming in on the wind side of things, and we expect this to keep moving up as we move forward.